The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Oh, what a week it was across the market trade after we got the tariff announcements from President Trump on Wednesday. We saw huge reactions to the downside Thursday and Friday in the markets, really broadly across the board, with the one exception and maybe one bright spot being the corn market kind of held firm as we got into the weekend. Let's talk about all of this. There's a lot to unpack here. Let's get some market perspective today from Naomi Bloom with Total Farm Marketing. And Naomi, welcome back to the program. It's good to talk with you. I think both of us are probably, like many folks who watch the trade, exhausted after what we have seen the last several sessions, Naomi.
Yeah, absolutely. I think we'll say Trump exhausted is how we're feeling with all of the moving headlines that just continue to unfold. You know, I was getting up this morning early. I went to go for a walk. And then when I came back into the house, the markets were down hard. And I was like, what happened? And then that's, of course, when we found out about the new response from China. And that just sent prices lower today for the agricultural space and commodities in general. But to your point, corn, just the big winner. The whole week, you know, every day fighting off negative news and climbing higher with that old crop. So that is definitely the bright spot. And King Corn, to what you said earlier, definitely still reigns.
Yeah, we were chatting off air before we went on here, and I said, King Corn it is. I mean, we started the week with that big acre number, and then obviously the tariff news and more here. And here's corn, kind of just feels like it's holding support. 450-ish on old crop, 430-ish on new crop, I'd say. It just feels like those are levels that we've tested them, but we're holding steady there. I mean, what are the corn charts and more tell you right now, Naomi?
Yeah, so when you look at a May chart and a July chart on the daily perspective, we are holding on to a very important uptrend that started back in early September. And what I really love about corn is how last week, Friday, it posted a bullish reversal for the old crop markets. And then 3 days this week, it posted 3 different types of bullish reversals throughout the day. And so it's just a very strong indicator that this market is not ready to give up. I think also supportive, the just genuine fundamentals of old crop corn are friendly. And we haven't even traded that yet. When you think about the quarterly stocks report number being so friendly, that's going to show up next week on Thursday with the USDA report. So that should give us some underlying support as well. The market, of course, just caught off guard a little bit by the bigger acre number coming in for corn, and then all of this tariff news this week. But again, the fact that May corn and July corn still above the uptrend, still posting, 3 to 4 different types of friendly technical signals this week in the face of all of this negativity just tells you how resilient it is. And I think that we're going to see better things to come yet for the May corn and the July corn contract.
I look over at soybeans and ending the week with just so much negativity and getting well below 10 on the future side again. Thinking about that corn bean ratio, a lot of folks have been talking about here ahead of the heart of spring planting. Well, this past week hasn't done that corn bean ratio any favors, has it, Naomi?
No, sure hasn't. And so we're just seeing even less incentive for producers to have any enthusiasm about soybean planting. And the fear, of course, is that China does some sort of cancellation with the remaining sales on the books, that we're not going to maybe ship them out to China. So that's the fear, or the fear going forward that China maybe for the new crop year tries to import less just because of the tariff struggle here. So time will tell. But when we come back to trade on Sunday night, of course, we're going to be watching all of the global news over the weekend on tariff response. But we also have to keep an eye on the Ohio River Valley. And my thoughts and my heart and my prayers just go out to those families who are going to be dealing with catastrophic flooding. And when you think about Western Kentucky, Southern Illinois, Southern Indiana, that southeast part of Missouri, they are normally planting this week, and they are not. So they're going to be substantially behind. Of course, to the market, there's still time for them to plant, but for what they can do for ideal yields, they needed to get going this week. That's not happening. So we'll see if we start actually talking about that and trading that next week.
And that I'm glad you brought that up because obviously I echo your sentiment. My heart is with folks who are going to be impacted with all of this devastating flooding. But I wonder if these markets as a whole, it just doesn't feel like we have really put in any sort of weather premium. We haven't been trading weather in these grain markets really at all yet, it seems to me.
No, you're right. We haven't. And so there's zero weather premium into this marketplace right now. And at some point, when we get done just trading the shock and awe of tariffs and we get back to reality, somebody's going to wake up and say, hey, the Americans, we were betting on them having this amazing crop to come. And oh, by the way, it's not getting planted on time to get that maximum yield potential. So I think the world needs to really pay attention to that. And if I was an end user from around the world, I would be paying attention to this price pullback, tariffs aside, and the dollar falling lower. There's some just tremendous value here for booking needs and American end users to be able to book some of those values as well.
What about over in the livestock sector? I should bring that up with you here. I mean, two very, very rough days in live and feeder cattle futures. You know, this cattle market's been so strong, but does all of this tariff fear and shock, is this what finally puts a top in this cattle market, Naomi? And that might be a tough question to answer. I mean, what's your thoughts over on that side of the equation?
Well, we got a lot of parts here. So we were due for a correction lower, and definitely the tariff fear triggered it because China and other countries of the world do import a lot of American beef. That's without question. So between technical correction, some fund profit taking, tariff fears, the move lower now is at the point where we're going to find out next week, was it just a correction? And what if you look at a daily chart for the live cattle and for the feeder cattle markets, the last two times on this humongous rally that we've been having, the last two times it's had corrections like this, the market will move down to the 40 and 50-day moving averages, and then it trades around those 40 and 50-day moving averages for about a week. Then we get caught up with cash news, and then the market has had the ability to turn around and go higher. So we are within about $1 of those important 40 and 50-day moving averages for both live cattle and feeder cattle. And we're going to find out next week if we're going to just wash below that and see additional technical selling, or if those moving averages can act like a safety net and support prices. We saw cash news this week pretty quiet, nothing dramatic that I saw. And then we'll be keeping an eye on domestic demand now that the stock market has crashed so much. The next question will be, will the consumer be feeling like they want to go out for that steak, or do they want to go out to eat, or are they going to kind of hunker down at home because they're not feeling good about maybe how their stock portfolio is looking or their 401k? So that's going to be what we're watching next week. But the limit down closed today, pretty eye-opening. We haven't seen that in quite some time. So next week is going to be volatile for the cattle market. I would really expect some dramatic price swings, but we'll see first and foremost Monday morning if those moving averages can hold or not.
How's the dairy market been holding up here with all the tariff news and more the last couple of sessions? Any notes for you on that side?
Not good is the answer. So the dairy market continues to just slide lower. Again, tariff concerns first and foremost at the heart of the issue right now. Now, the one thing about the dairy complex is that usually in some point in April or early May, we start to find our seasonal low and then have our summer rally. So we're going to be watching out for that. But definitely the tariffs have been an issue for the dairy complex also.
All right. Final thoughts here. And I'd love to just get your perspective on managing risk here with all this volatility going on. I know that this is going to be it's a tough thing to answer. Everyone's situation is different, but just in general, what would you remind producers as they're watching all of this movement in all of these markets right now, Naomi?
Well, just remember, we're back to trading President Trump and the different type of tweets that come out and the different type of activities. So the biggest thing I can say is no matter the position that you're in, make sure you have a risk strategy with it for in case the market suddenly turns higher or suddenly goes lower. And anytime you see any profits there, make sure you are grabbing them and re-strategizing, because we can just shift so quickly. So right now, again, we're trading with all of these commodities, the tariff news first and foremost. And I'm hoping that in the next week to 2 weeks, we'll start to go back to trading seasonals and actual fundamentals. We've got that USDA report next week, Thursday, but you've got to have a balanced approach. And you can't just assume that what's worked in the past is going to work again now. You got to keep the strategies shifting. You've got to be on top of this every day. And it's not just in the morning, it's got to be throughout the day. And now is going to be the time when farmers are getting busier in the field. So really start to be thinking about, if you have some cash targets for cash sales that you're thinking about, call and get those orders into the elevator now. And then also, in case the tariff or there's more bad black swan news, have some risk orders below and just be mindful of what potentially could come, because it's going to be a volatile ride.
Well, of course, we always remember the risk of trading futures and options could be substantial. Naomi, I know if folks want to reach out to you and the team there at Total Farm Marketing, you guys have a lot of ways to get in touch, whether it's phone, web, etc. How could folks reach you, Naomi?
Yeah, give us a call, 800-334-9779. We have a great team ready to help out. Or I think on our website, totalfarmmarketing.com, there's a nice little spot in there that you can just type in a question, and then one of the advisors will get back to you.
Fantastic. Always appreciate the insight. Naomi Bloom, Total Farm Marketing. Thanks for joining us here on Market Talk. Have a great one. We'll talk to you again soon.
Thank you.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.